Alrighty then. Everybody got their lunches packed? Got a snack pack? Gotta have the snack pack. Shoes tied tight? Don't want to get in a fight. Oh, back to school. Alright. So today, let's make sure we're all on the same page. And when we're talking about things, we're talking about them in the same way. So let's go through some quick, I'm not going to do all of these, but we're going to hit on some of the main points just so maybe you're new to the channel, if you are, welcome. And maybe you've been around for a while, but maybe some of these are things you've heard, but you didn't quite know what it meant, or maybe it's new to you. And honestly, maybe I leave some stuff out. Put those in the comments below. Let's build a little vocabulary dictionary of our own right here in the comments if you want. So, but let's go ahead and start. Most people know what a two-factor authentication is, like Google Authenticator. 51% attack, we've heard of that. And that's basically when the miners hold more than 50%. They can control what they want to do. They can manipulate the system, double spend, so on. Address, that's like your Ethereum address, or that's where your wallet is. Usually you have a private key, public key, stuff like that. Most people know these kinds of things. Airdrops, that's a way for distributing coins. So not usually, but some coins or tokens will leave a percentage aside for airdrops and marketing and stuff. So you can get it. You got to be careful though. There's a lot of scams associated with airdrops, just so you know. Algorithm's just a fancy math word. It just means like a math sentence or a formula or something that produces calculations. Altcoin is basically anything other than Bitcoin. AMA, ask me anything. Anonymous. AML is anti-money laundering. KYC is know your customer. APY is an application programming interface. APY is annual percentage yield, which also there's another, it's CAGR, which is your compound annual growth rate. I don't think that's on here either, if you see that. ASIC is another one you may see. It's an application-specific integrated circuits. It's used by miners, and it's basically like a piece of hardware that's specific to mine a specific coin, token, function, something along those lines. Let's see, ATH is your all-time high. ATL, other than being Atlanta, that would be your all-time low. See, bag holders, bagging up, getting, my bags packed. That just means you're buying more coins, you're getting a bigger position. So when things are bearish, it means that they're looking downward, bad, not so bueno. Bear market, bear flag. So here is bearish patterns. I'll put all these links below. But here's an example of a bearish flag. How to identify bearish flags on the Forex. Here's the points that you want to watch for. When to enter, when to exit, if you're going to short, and so on. Bear trap, same thing. So let's see, Bitcoin Cash is another token. Bitcoin ATM obviously is just an ATM. Bitcoin Pizza. Back in the day, there was a guy who spent like 10,000 Bitcoin to get a pizza, and he's a meme now. It's urban legend kind of thing. There's tales of all. You got the BitConnect. A lot of these are just things you don't really quite need to know. Some of them were scams. Some are Bollinger Band is a tool for the trading market, and it consists of 3 lines made up of their simple moving average. The middle line is the simple moving average, and anyway. It's 3 lines with 3 different moving averages. That's all you really need to know for now. A bull market. Now, bull market is the opposite of a bear market. Here's some bullish flag signals and information and points, flagpole flag. And a couple of different, these are stocks, but examples of, variations of what you could see. See how they're all just a little bit different, but they all have the same general principle and fundamentals. If you're curious about a bullish flag, this link is below. Bullish is the same thing. It means that you're predicting that the product will grow, the coin will be trending upward. Candlestick charts. We have this right here, understanding basic candlestick charts. And there's a whole, it's almost like learning a whole nother language once you start getting into these kinds of things, and different markets and cup and handles and J curves, and there's a bunch. And we'll talk about some, but we're not going to go very deep. And if you want to look, here's some pretty good basic stuff. Gives you an idea. Here's your candle. You have your high price, your open price, your close price, and your low price. and it's the same on both sides. Green is higher, low, red is lower, or white sometimes I think they use. You have bar charts. Sometimes they call these, if they're filled from the top to the bottom, they'll call them like a dildo or something like that too. Bearish patterns, bullish patterns. Let's see. Rising 3, falling 3, stuff like that. Anyway, it's good to look at. CBDCs, we made a video all about these, but those are central bank digital currencies. Centralized means that someone is in charge, that, there's a controlling entity. Decentralized means that it's dispersed over everyone, and there's not a main person in charge. Everyone's kind of in charge. Fiat money or fiat is just like a dollar or a euro. That's your regular currencies. Circulating supply, that's how many of the tokens are out on the street. You can have a maximum supply and a circulating supply that are different. And, maybe the maximum supply will be released in increments over a certain period of time. And then the circulating supply, what's out and about, will increase at a certain amount over time. CMC is your coin market cap. A coin is native to the blockchain that it's on. Like Bitcoin is native to the Bitcoin chain. A token is something working on somebody else's system or network or protocol or cold storage. That's when you take it off of the internet, away from everything. You put it on a hard, like tangible wallet, like a digital ledger, like a Trezor, like a Nano S, Nano X, whatever you got. Collateral, that's the same in both worlds, all worlds. It's you're giving something to get, you're putting up like your house for a loan or something. That's collateral. Cryptocurrency, they're basically the same thing. Crypto is kind of a verb though to me, because crypto, when you talk about crypto, it could mean trading, so that you get that feeling of, hey, we were going up and up and up, we're making tons of money. You get that feeling of, oh shit, we just crashed and now we lost a bunch of money. It's an emotional roller coaster. There's a lot of emotion attached to the word crypto, I think. And then cryptocurrency takes the emotion away and gives it a tangible item to focus on, my opinion. Let's see. CZ, you'll see CZ a lot, and that's the Binance founder, Changpeng Zhao. DAO is a decentralized autonomous organization, and basically this organization runs automatically on its own without any human intervention. Decentralized applications, same thing, it's an application. Smart contract. Dollar cost averaging, sometimes it's just called cost average buying or stuff like that. Basically, instead of buying all of your money one time at one point into the market, you'll buy a little now, and then hopefully maybe it goes down a little bit, you buy a little more. If it goes up a little bit, you buy a little more. And then you're spreading your loss and your risk over multiple price ranges, and hopefully it keeps you from getting wrecked and increases your revenue on that, your return on your investment, your ROI. You have a dead cat bounce is a term in finance. In the crypto market, it refers to a brief price recovery before a major crash. And here's a link for trading a dead cat bounce. You really see these in volatile markets. So let's see, extremely volatile markets create an environment for formation of a very specific type of technical pattern known as the dead cat bounce. DCB, sometimes you'll see it in there. Here's a little video if you want to read about it, but here's the bounce down. You can see the bounce points. So if you hear what a dead cat bounce, that's what a dead cat bounce is. DeFi, that's decentralized finance. So you have centralized finance, that would be like your bank. Someone owns the bank, and they're giving you lending functions, loaning, whatever, financial functions. Decentralized finance is not one person. It's usually run on a blockchain or like a DAO or an exchange where they have liquidity pools or they set up exchange pairs or something along those. Degen, degenerate. So basically a degen, man, that's a guy that's like it depends what your perspective is in the spectrum. So if you're like a Bitcoin, only kind of person, then basically everybody else is a degen that deals with the altcoins and stuff like that. If you're like a top 10 altcoin guy, then the guy's looking in the bottom on the low liquidity brand new coins, the new this swap, that swap, whatever, sushi swap, pumpkin swap, monkey swap, I don't know, whatever. There's always a new swap, right? Uniswap, I mean, unicorns, it gets crazy. Those would be degens to some people. So it's just someone either that uses like leverage can be a degenerate, a degen trader. High leverage is definitely a degen trader. Someone who's a lot of risk and takes a lot of gambles would be a degen, basically. And it's not always derogatory, you know. Like I'm kind of a degen where I hang out and find new coins and stuff. That's degen areas. It's not a horrible thing, but you want to have, you know, smart investments as well. DEX, we talked about decentralized exchange. Yeah, here's a dildo, and we talked about that. Buying the dip, you know, you have, let's see, it's got to be a, you know, you don't want to buy here and then have it come way down here. You want to buy down here or here and then come up, right? This is buying the dip down in here. DYOR, do your own research. ERC20, that's the smart ERC20 are the tokens on Ethereum. EFTs, exchange traded fund. ETH is Ether. Ethereum Classic, exchange. Fanboy, you'll hear fanboy a lot. It's and it's usually spelled like this. And it's usually like someone who's just obsessive over currency and crazy, and yeah, they're all over. Fiat, we talked about fiat was just money. Fiat currency, same thing. FOMO, fear of missing out. Those are the guys that buy at the top. You know, Bitcoin's been going up and up and up for years, down, up, down. You could have bought it 3,000, could have bought it 5,000, but you know what? I'm going to buy now at 50. That's FOMOing in. And honestly, actually, even right now, Bitcoin's probably going to go up. And then there's also JOMO. The joy of missing out, like I almost FOMO'd in and then that thing crashed. That's the JOMO right there. That's the joy of missing out because you almost got wrecked, but man, I missed that by just a second. Free corner is somebody who they own some sort of a crypto, like maybe somebody gave them Bitcoin for Christmas or something. And they don't know what to do with it. They just have it. That's a free corner. FUD is fear, uncertainty, and doubt. And a FUDster is someone who, they basically lay shade on stuff, usually to manipulate the price, to bring stuff down, or, you know, competitors will FUD other competitors and stuff like that. Gas is the fee on Ethereum. Gas is also a token on Neo, because you have Neo and Gas. So that sometimes that confuses people. Way is like a Satoshi for Ethereum. Genesis block is the first in the blockchain. GIF, you should know what a graphics interchange format is by now. A hard fork is when you change off, like a major change in the blockchain protocol. So you have, like Yearn Finance did 2 hard forks. So you have Yearn Finance, YFI. Then you have YFII was a hard fork. And then you have YFIII, which is another hard fork. And YFII does like mobile. They wanted to focus more towards mobile users and whatnot. I did a video later if you wanted to, or a few days ago if you want to check the Yearn Finance stuff. I think those will be coming back around. That's a hard fork. HODL is just basically a long time ago some meme-ish stuff started from a guy misspelling I'm going to hold my coins, but he put HODL. Now it's basically it's kind of a hold on for dear life, or you know, because it's a volatile market in the cryptocurrency. It goes up, it goes down, it's crazy. And so you basically got to hodl your ass off and hold on for dear life. ICO offering is like an IPO, but it's for coins, initial coin offering. Immutable just means it can't be changed. Interoperability means you can work from blockchain to blockchain. You know, everybody should know the IRS by now. Here's JOMO, the joy of missing out. KYC, know your customer. Everybody wants a Lambo. It's just a joke that you're going to make it. You're going to find that coin that's going to give you a bunch of money. You're going to get the Lambo. You're going to go to the moon. All that kind of stuff. Here's some of the ledgers we were talking about. Yeah, Ledger Blue and Ledger S. There's a Ledger Nano X. Some of these are, market capitalization. So that's basically the total value of all of. So if it's the total crypto market cap, that's everything. That's just the value of all of it that's in it. You have market makers. We'll talk about these in a second. Because you have automated market makers, you have proactive market makers, and we'll get to that in a second. Maximum supply, that's how many total they are. And we talked about the difference between circulating supply and maximum supply. Medium's just a platform, publications. You can find tons of good articles about most cryptocurrency. Mu is a wallet. Miners, mining, and stuff like that. That's where the coins come from. And that's where we talked about the ASIC. Mooning, it just means it's going to go to the top. You know, you're going to crazy growth when you get the Lambo. Mt. Gox is just an exchange that got hacked and stuff back in the day. NFT is a non-fungible token. It means each one is different. There's ER721s, ERC1155s. So like in Ethereum, ERC20, each one is exactly the same. They're like a dollar bill. But now if you take one of the NFTs, that would be taking the serial number on each of those dollar bills. Although they're the same-ish, each serial number now would be worth a different value based on what the user set that value to be, or however. Each one is now traceable by that serial number and completely different from the others, even though they may look exactly the same. And NFTs may not look the same, may look the same, but it's kind of a way to say it. No coiners, obviously, it's somebody that doesn't do crypto, doesn't have it. Noobs, somebody who's new. A person who is not very experienced in a particular topic, like complex world of crypto, can be called a noob. And that's computer terms too, noob, stuff like that. The ODN is abbreviation for the Origin Trail Decentralized Network. Track is trace token. OG is the original gangsta. Orphan block is a block or blockchain that is not further built upon. And then if you want to go further on that, you can have basically like dead coins are just abandoned. You have zombie coins, which are ones where basically the team has, basically abandoned it and people are still buying it, which is interesting. So you get pump and dumps. Pump and dumps is where, they either through manipulation or FOMO or hype or something, the market jumps way, way, way up and then just crashes right back down. So people will, maybe hype a project, buy it when it's low, then hype it. When it goes up, they sell it, and that's a pump and dump, if that makes sense. You also have like hopium. Hopium is, man, I just hope this is going to get there, and it's almost like a drug, right? Parachain, that's on Polkadot. You have parachains, parathreads. We've made a video about that. Phishing, that's when they try to get you. You've seen phishing scams, trying to get personal information. There's lots and lots of scams, usually in the comment section or even the ads before all these videos. There's a lot. Don't ever send your private key to anybody. And if somebody says you need to send them crypto to get crypto, tell them to eat a rock, because they ain't playing straight poker with you. You have proof of authority, proof of burn, proof of developer. There's so many proof of work, anyway. Portfolio is what you got, your investment, you want to diversify. Yeah, proof of stake, proof of work. Then you have privacy coins. Privacy coins are like Dash, Monero, Haven, stuff like that. And then these are your private keys, public keys. QR code, that's that funny looking barcode in a square. Wrecked, that means that you can be wrecked and not completely be out of the game. It sounds worse than it is. So maybe you made a bad trade and lost a little bit, you got wrecked on it, but then you make it back or whatever. Or maybe you didn't make a trade and then you feel a little wrecked because you could have made all that money. It depends on the context and the perspective and the people. So roadmap, that's just where they're going. That's their timeline of their plan of events that they hope to do in the future. ROI is your return on investment. Sats, Satoshi, that's just your smallest increment. It's like your penny for a Bitcoin. Satoshi Nakamoto, that's the alias of the anonymous creator of Bitcoin. Obviously, we know what a scam is. SEC, that's the Securities and Exchange Commission in the United States. Shilling, that just means like you're pimping a coin out, you're trying to get it to, you're promoting it. Shitcoins are just the garbage ones. You can make money on shitcoins, but they're the ones that usually don't have fundamental utility value and they lack the ability to really have adoption. Like meme coins are a good example of shitcoins. Shorting just means that you think that the trading strategy where you speculate the price will decline, and then the longing, you think it's going to go up. Slack, smart contracts. Solidity, that's the language for Ethereum. So like Dodo, I think they let you use any language Ethereum use Solidity. Swing. Tether's a stable coin to the moon. Total supply. Trezor, that's a brand. And then you got Vaporware is a term. It's basically like shitcoin, but usually like in a software as a service kind of a thing. And then Vitalik Buterin, he's one of the co-founders of Ethereum and the inventor of the smart contract wallet. That's where you keep your crypto. Wash trading, that's usually like people trying to manipulate the market. Wash trading is actively on exchange where trades are done with themselves solely for the purpose to increase the trading volume. Makes it look like more of the coins are moving than are actually. Weak hands, these are like the a lot of times new crypto investors are called weak hands because you come in, you buy it like FOMO in at the top, and then you see you feel like you got wrecked when it goes way down, and you don't, not you, but those kinds of investors don't have the patience usually to wait out, the next 6 months or year or 3 months or whatever it happens to be for the correction to get back above where they bought in. They just abandon it. That's a weak hand. Where you buy in and you just give up and you just take your loss and roll out. That's a weak hand. Those are washing the weak hands right there. Whale, that's someone who has a large position in something. It could be any coin can have whales. White paper, that's usually what they write down. That's like the mission statement, the product description, the whole plan assembly, and usually find those on the sites of the pages, and those are really good for your research. All right, let's see what we got. We did bullish, understanding, trading. Plebes, same thing as a noob. It's a plebeian or a commoner. Stonks, that's another one you'll see. Stonks is just another word for the traditional legacy style stock market, New York Stock Exchange kind of thing. Crypto guys call them stonks. Here's some hopium. Bitcoin bulls look for the light light in the dark tunnel. That's hopium, Man, I think this thing's gonna do it, even though maybe it's probably not. It's like a last desperation kind of thing. And then we have. Okay, so here's our market makers. And you have automated market makers, and then you got proactive. Oh, this is where I was talking about Dodo. It has proactive market makers. So Uniswap has automated market makers. So they work for you. However, they're not quite. I'm trying to do this in a very general. The proactive ones are more actively managing your assets and usually show a higher return and are usually more efficient than the automated money market models are, if that makes sense. The PMM, proactive money maker or market makers, are basically an evolution. Dodo is an example of that. And Uniswap is an AMM model, if that makes sense. And we can dig into this later, maybe if you guys want a little deeper. Just know that, in my opinion, the PMM are the more evolved of the two. How's that? And then the final one we're going to talk about today is a sucker rally, because once the market goes and it hits its peak, which maybe we'll do a video about that too, but it's going to be late summer probably is when people should start looking to be a little bit concerned, and we'll see some corrections along the way. It's going to probably come back down, and then you'll have these suckers rallies where you think, oh, that was just a big correction. We're still going to moon. And it's really not. It's, you'll have maybe one or two of these suckers rallies and then to the basement. But if you want to read more about a suckers rally, here you go. So hopefully that wasn't too much. Hopefully somebody, if you've been around, I tried to throw in a lot of stuff to where even if you're in the intermediate or, maybe you learned something today is where I'm going with that. And if you got value in this, hit the like button, and comment. Add some vocabulary to the bottom. I really want to know what I'm missing, I know there's quite a bit that I didn't cover, but I figured it was more of a general knowledge. So yeah. And as always, best of luck on all your investments, and we will see you soon.